Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at some charts here for macro Monday on the legacy side. Lots of volatility, lots of uncertainty, lots of anger out there in the charts. Last week's global crypto ETP flows were deeply, deeply negative. Not really surprising based on the price breakdown. You tend to see this on the way up and on the way down. And on the way down, you tend to see it all at once because it's stairs up, elevator down most of the time. Not all of this is net long, and I will say this every time I talk about these charts. Some of this is a basis trade where you are short the future, long spot ETF. If you close out that trade, it shows up on this chart as well as flows coming out of the ETFs, just as it would if you were opening the trade. It would look like flows into the ETFs. So it's not as simple as every dollar in or dollar out is some expression of long versus short. Just keep that in mind. But obviously, with price down as much as it is, as far as it is, that played a big factor in the flows. I think this is the biggest outflow. This is, of course, from James at CoinShares. I think it's the biggest outflow on a weekly basis ever, if I had to guess. Yeah, largest weekly outflows on record. You can see some of the basis information on these charts here from Velo. The annualized basis came way down. Open interest came way down. Some of that's going to be notional value, of course, but that's also bleeding ETF flows lower. The question for this week and going forward is, what do we expect to see here? My instant reaction is, as long as we're in the daily cloud, it's literally anything goes. This is why the cloud itself is always a no trade zone. The same thing with the SPY and the Qs and Mag7 and anything. Gold, like it doesn't matter what it is. This is the whole reason why the cloud is so great. It tells you good conditions for long, good conditions for short, and good conditions to go fishing and do nothing and just let price do things. High volatility environment. So we'll get to that in a second, but some people are suggesting perhaps OI needs to go all the way back down to 10 billion, currently at 12.8, likely to fall a little bit today. On the opposite end of the spectrum, and just kind of the reason why we need gold to settle down, is you finally saw massive inflows into the gold ETFs. Gold and BTC do compete for attention and flows. Typically, flows like this represent the end of a move. Everyone's usually late to the move. You'll notice before this, flows were up, flows were elevated, but they weren't 4 billion in a week, right? So I think gold will be fine. It'll continue to trend favorably bullish, but usually things like this represent the top because retail's typically late, and who buys ETFs is typically retail. We also have a lot of gold stuff going on, arbitrage, London versus New York, that I'm not going to pretend to fully understand here, but it's very interesting movements on deliveries. So along with everything else that's going on, volatility, headline risk, tariff risk, we also have a bunch of physical gold stuff happening that almost certainly has interesting effects on liquidity in the ecosystem. Before going any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to our trading style. You can check out Kraken Pro at the link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to you as U.S. territory customers by Payward Ventures Inc., PBI, DBA, Kraken. On the daily BTC cloud, not much has changed, not much will change. We go from these periods of range contraction, volatility contraction, establishing some sort of bias. Then we break down, and then volatility is back. This is volatility. The best idea I had was Sunday, or Saturday, I guess at this point, which was the low time frame inverted head and shoulders that broke out. It hit the target where you'd expect it to go, and you got nothing more. That's where you say, thank you, sir. May I have another? I will close out here. But on the daily, you're really unlikely to see anything significant setup-wise, at least that I can see, anytime in the near future. This could still end up playing out as a V-bottom. I doubt it. It could end up playing out as a W. Still possible. It could end up playing out as a multi-week inverted head and shoulders into Q2. That's still possible. The most bearish case from here would be some sort of like 3 drives to a low and then a reversal. This is called a bullish 3 drives, but it's not bullish on the way down, obviously. You'd want to watch for a bullish divergence here on RSI, which we haven't even started to establish. It does worry me that we are flirting once again below the 20-week moving average. So that's important to pay attention to. We certainly don't want to fall below the cloud. Certainly don't want to fall below the yearly pivot. And if Bitcoin's angry like this, you can bet everything is angry like this. And that includes ETH, Sol, Ripple, Cardano. Never usually a good idea to buy something that's up 60% in a day. Usually best to just let it breathe a little bit, give it some room. So Cardano coming back there, no surprise. One thing to watch for just as a trading idea would be into April, again, something like this. As long as we can maintain the range without breaking lows, that is a viable idea. ETH is not so lucky. ETH retraced the move and then some at this point, and ETH might be in like serious trouble until something changes in a big way. Liquidity, rates coming down, something. It needs help because whatever's going on here isn't working. Maybe it needs the blob change to get reverted. I have no idea, but this is deeply bearish, continues to be deeply bearish. And Sol also giving back a significant portion of any of the gains from yesterday. So maybe all of this pans out as some sort of double bottom, triple bottom over time. It's just clearly too early. Any setups that you had an opportunity to take have come and gone at this point. And it's going to take a week or two to establish either the next range or the next chart pattern or something. But as of today, there really isn't anything here that to me is screaming, hey, this is a great setup or this is a great idea. Ripple still has that head and shoulders concern on the daily. It's not there. It's messy. It's not perfect. You'd think it would be negated by now, but hey, we're back in the range, so that's still possible. Something else to watch for would be LTC, which had held up quite a bit, but seems to have broken down at this point. Still in the range though, so it's not over for that idea either. But a ton of volatility on tariff news coming, along with the GDP print, which we'll get to in a second. As far as economic data points this week, employment is going to be the big one at the end of the week. PMI, some Fed speak, JPOW at the end of the week. Probably something worth paying attention to. But they will continually get pressured and asked, okay, where's the breaking point here? And if they say higher for longer, don't care, I can't imagine the markets are going to be happy with that. If they give some concrete numbers here and say, okay, if the unemployment rate accelerates to X% or XYZ things start to deteriorate, then maybe we'll see markets slightly happier on that. But until we get some movement on that front, markets look angry. I thought this was an interesting data point. Global Economic Policy Uncertainty Index, however that's measured, is approaching the highest levels in history, above 9/11, above the GFC, above COVID. So there's a lot of uncertainty, and that's not good for risk assets. Typically, if you thought GDP was as low as it got last week on estimates, it went even lower today. We get the next print on March 6th as an estimate. This would be one thing if we were starting to see this at the beginning of the quarter, but to see this at the end of the quarter, not great. Not great because that means we will probably likely snapshot a negative GDP print for the first time in quite some time. This is from Liz Young at SoFi. She broke down the categories here. And what's really hurting is the lack of consumer spending, which is just basically flat, along with the net exports, which have picked up in a big way. And that's where we get the GDP print that we are currently experiencing. So not bullish, not supportive towards markets until intervention is enacted by the Fed or the Trump administration. Drewflation also crushing lows here. A lot of people talking about stagflation, but based on the real-time estimates, we aren't really seeing inflation rising. Now, on aggregate, it's up, obviously. We're all feeling that. Certain food items like eggs are up, obviously. But collectively as a whole, this is coming down. And if we look at the Fed's own estimates for February into March, also coming down, and PCE with a full two-handle 2.08 estimate. Now we're only 3 days into March, so this is going to change a lot, obviously, but this is starting to get picked up in CPI. The bad news is it's not going to get picked up in the near term. It's going to take some time to work its way through the system, but this is likely to push rates lower quicker, you would think, the worse these numbers get. But there's certainly going to be a period of time here where Crypto could go lower, legacy could go lower. Absolutely, because it's going to take time to work its way through the ecosystem unless we see a massive jump in something like unemployment. The good news is here, DXY coming down, putting in what I think is safe to call at this point a head and shoulders here on the weekly, on the daily. It's also in its own weekly cloud. It's in the daily cloud. We probably really won't see an effect on this until sub 105, 104, and then ultimately anything below 101, 100. This is where BTC starts to really shine. So that obviously is going to take some time. 10-year also falling off quite a bit back down here to 4.18. At one point, it was risking going above 5%. So this is good for long-term debt. And that's really been the focus of Trump and Bessent in the first couple of months of the administration. Looking at rates, yield curve, unemployment, we do get a print this week, should be around 4.1. I wouldn't imagine we would see any of the DC stuff work its way into the system enough yet to see a massive spike there. That's obviously something to continue to watch. And the 10-2 curve still slightly positive. Oil still crushing lows. This is great for inflation on the energy front because, of course, gas prices continue to hold below multi-year lows. And that's what they wanted. They wanted the 10-year down. They wanted gas prices down, and they wanted GDP up. So I don't know about that. We're not going to see that, at least initially, based on how GDP is calculated. Something to keep in mind here is, again, for risk assets, they don't like uncertainty. They don't like random news. So the VIX may continue to stay elevated until things settle down, potentially into Q2. As long as the VIX is elevated, crypto probably is angry and goes lower. So anything above 20, and we are in danger territory, especially holding at 20. The MOVE index, this is the VIX of the bond market, also started to rise again. And this hurts liquidity, which again hurts risk assets. And as far as the indices, not too much has changed here. It's not like the sky is falling. We're only down probably less than 5% from all-time highs. As far as the trend is concerned, we're in the daily cloud. So 575 is certainly in the cards. Ranging certainly in the cards. None of this looks super bullish or super bearish. It just looks neutral, range bound, just waiting on headlines, right? The Qs look a little more violently down here, potentially signaling a little bit of a double top, but not yet in bearish territory, not angrily bearish as of yet, just ranging. Doesn't really look like much of a safe long or a safe short. The Mag7 collectively are kind of all over the place. NVIDIA down big today, hasn't been able to hold above the daily cloud. You've got TSM also down more today, despite announcing, I think, a $100 billion investment. And this is definitely more in bearish territory than most things right now. Apple looks better than almost everything in that it almost looks like a utility. It is holding above the cloud, just waiting for the bullish TK cross there. So at the very least, some of this stuff, Netflix is another one, looks totally fine. No issues, still in an uptrend. I don't see a great entry necessarily, whereas Apple looks like a better entry to me than Netflix or even Meta. But they don't look outright bearish. They don't look like Tesla, which we'll get to in a second here. They don't look like Microsoft, which has a full-blown bearish edge-to-edge in action here, potentially down to 350. So some of these can easily break down and not affect the index that much, right? Not affect the SPY and the Qs that much. But if everything starts to break down, that's when we have problems because we are so concentrated. Google just giving back everything since December 2024 in bearish territory, and Amazon also looking neutral, sure, but not exactly happy to be here with sliding as low as it has throughout February. So it's not just crypto that's having issues up here. It's most of these momentum trades. And then Tesla, of course, almost giving back everything since the election, ready to fill this November 5th breakout. So there's not really many places to hide on the risk side of the spectrum as far as things that have worked in 23 and 24. And that's probably why you see a lot of people focusing on the defensive side, which is what I was highlighting in last night's video, with some of this yield stuff, some of this less flashy stuff starting to look more bottomy, whereas the momentum stuff still looks pretty weak or is rolling over. WGMI opened up higher today, but gave it all back. Didn't open up as high as I think it would have opened. And miners, to me, just continue to be not the place to be broadly. And the same thing with MSTR, gave it all back today. The best time for beta is when you're sure, in this case, of BTC's movements. And if BTC's movements are erratic and kind of all over the place, it's not going to look good for most of the rest of the market that is reliant on BTC holding a bullish direction. So that's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.